Welcome everyone to Vested Interest. This is Shane, and before we get into the video, I'd like to take a moment to thank everyone who's taking the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. The channel continues to grow because of people like you. For those of you who may be stopping by for the first time, on this channel we focus on dividend growth investing. It's not rocket science, in my opinion. The best way to do anything, keep it as simple as possible. So it really boils down to consistently investing, buying dividend growth stocks in growing companies with growing revenue, expanding margins, enough free cash flow to cover the dividends and raise them over time. I do cover all of my investments into the portfolio, any dividends received, any options that I'm in. We do run some options on plays. We try to do weekly options here. In this video, we will cover the $589 in new capital that I added to the portfolio. And we did have some movement. Yes, I made another sale in the portfolio and reallocated $16,270. So we will go over what I did there so you can see what's going on. There was some movement this week that I thought was interesting and took advantage of it. And it could be a bit of a speculative play based on the news and stuff that's coming out. But I thought the juice was worth the squeeze, so to speak, so we will cover that as well. And with that said, don't forget to hit everything down below, the thumbs up button. Make sure you subscribe to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click the notification bell so you're notified whenever I put out any new content. Again, I do this portfolio update every Sunday morning. You can see what's going on in my portfolio, and there is the thanks button down below for anyone who might want to buy me a cup of tea. And again, really appreciate all the viewers and subscribers of the channel. You guys and gals are awesome, and let's get into it. All right, options. Not a great week in options. This was one of about 4 or 5 plays that we threw out there. We even tried to run again on SCHD, but this was the only one that hit. Again, a lot of fluctuation in the markets, and I'm not quite timing everything right. I do these pretty conservatively, as you can see. This was a $70 strike price, right? So it's way out of the money covered calls. I'm trying to keep the positions in my portfolio while also generating a little bit of options premium. In this case, we ran 2 contracts. That's what the -2 means. On CVS Healthcare, right? Ticker CVS, out of the healthcare sector. And we did that with an expiration date of May 16th. $70 call. So that just means if it was at $70 or above, these 200 shares, that's what a contract represents, 100 shares, would be called away and I'd get the $70 per share. Now that means if it was $71, $75, if it jumped up to $80, I would only get the $70. So you do limit yourself on the upside. But again, I'm putting these out of the money, in my opinion, far enough where they're not going to hit, and I can collect some options premium. In this case, $18.92 per share. And I throw this money right back in to the portfolio. All right, and here it is, the big sale in the portfolio. We did sell out of an existing position, American Waterworks Company, ticker AWK. This is out of the utility sector. We did pretty good on it. We made 14.66% on this one. And I thought there was a better opportunity, so we sold 117 shares, and actually there was some fractions of a share. They don't always post the fractions of a share, but usually I get them a day later, so I think there's another $40 or $50 that will probably hit. We'll reinvest next week as part of the sale, but we're just going to call it $16,270.41 in total. For the reallocation here. And we also will get this dividend. I think it pays out in June, but we were past the dividend, the ex-dividend date. So this one's locked in. We will get the dividend even though we don't hold the position anymore. So it will be our last dividend unless this one drops back into the 120s where I wouldn't mind picking it back up. And that's where I was buying it. I was actually buying it down in the 115s, 117s, and then let it run up to about the mid 120s. And my cost basis for the 117.31, that's the 0.31932 shares. That'll show up next week. I probably won't cover it just because it's, like I said, I think $30 or $40, something like that. But we were buying it in the 1-teens into the mid 120s, and our cost basis was this $120.71. So I was comfortable taking this $2,148.47 in gains. And as you can see, we bought a couple different positions, but the bulk of it, the vast majority of it, went into United Health Group. Yes, ticker UNH, out of the healthcare sector. We did take advantage, and not quite quick enough. I'll be honest with you. I didn't really look at the market until around noon. I wish I'd have looked at it in the morning. I probably would have made this sale and been able to get this one in the 250 range. Now, I did a video on this, stock pick of the day video, which I do Monday through Thursday. Another reason to hit that notification bell down below and make sure you're subscribed. I do those stock pick of the day video series videos Monday through Thursday when the market's open, and we take a look at companies like United Health that pull back on the day. This one had a big drop. Was it a week ago, 2 weeks ago? Maybe it was 2 weeks ago now. 15%. So that's whenever it caught my radar. Then it dropped a little bit more, maybe 6% here, 4% there, 3% there. And I do work in the healthcare sector, so I was not real interested in the company at all. But then I saw earlier in the week, this past week, it dropped another 15%. And then I believe it even backed that up the next day with another 15% drop. So there were some huge drops. And then, like I said, on Thursday, I jumped into the market at least to see what was going on around my lunch break, and saw that this one, it was in the mid 260s at that point. And I had done a discounted cash flow analysis on this one a while ago, and I wanted it under 290 to $300, right in there, even $280 to $300. I thought that might be a better buying opportunity. I know a lot of people were jumping into it when it dropped into the 400s. More were jumping into it when it dropped into the 300s. I didn't really think it was worth the squeeze there, but in the mid 200s or even the 270s where I bought it, I thought it was worth the squeeze. So we did pick up 60 shares of UNH, and that took up the majority of this $16,270.41. Again, it was 16,000, but that's what we reinvested, $16,309.73. So some of it went to our regular weekly buy, but the majority of it was taken up here by United Health at $16,215. And again, cost basis of $270.25. And if I'd have been just an hour earlier, I'd have got this in the 250s, like 258, 259, whenever I first saw it, into the 260s. But by the time I sold this, and the funds take a couple minutes to actually clear, then it was already up into the 270s, and I think by the end of the week, we'll see that here in a little bit, it was already into the 290s. So and then I also added 5 shares of Valet with a little bit of the extra funds there at 979. So with the sale of AWK and the loss of that revenue, passive income, and then with the added UNH plus Valet buys, we actually added $124.14 in passive income. So this was one of the few times we sold out of a position and we actually increased our passive income by doing it. Now we get into the dividends. We had a pretty good week in dividends here. May 14th, we received $265.33 from Enterprise Product Partners, ticker EPD, out of the energy sector. We do have the DRIP set. DRIP stands for Dividend Reinvestment Plan. So that just means that anytime a company, in this case Enterprise Product Partners, pays dividends, in this case the $265.33, they go right back in and buy more shares, and it picked up 8.351864 more shares of Enterprise Partners. And these new shares, the 8.35164 shares, added an additional $17.87 in passive income. And this is, whenever you hear people talk about the dividend snowball or compounded interest, this is what they're talking about, right? We already owned a big position in Enterprise Product Partners. The position paid out dividends. Those dividends buy more shares. Those shares, if you have the DRIP set, they'll buy more shares, and then those shares add additional passive income. And even if we don't add to Enterprise Product Partners, this snowball is going to continue to grow at least during the 4 payouts over the course of the year. And as you can see, we're getting a pretty big tranche of shares whenever the dividends are paid out, 8 shares or more, right around there. So that would be 8, 16, around 32 shares over the course of a year added just from the DRIP. And we weren't quite done. We had some dividends come in on the 15th here, $364.77 total, split up between these 3 positions. We received dividends from Ally Financial, ticker ALLY. This is a bank out of the financial sector. Ally paid us $72.84. Again, we have the DRIP set. Picked up 2.03811 more shares of Ally. Procter & Gamble paid us $87.58. Those funds went right back up in and picked up just a little over a half share of Procter & Gamble, 0.55023. And Omega Healthcare Investors paid us out $204.35, and again went right back in, picked up 5.64729 more shares. That's another one that's giving us a pretty big tranche. That'll be a little over 20 shares added back into Omega Healthcare Investors just from the DRIP here. And I have not been adding anything to that position. Now, these new shares added an additional $19.89 in passive income. Now we get into the first new capital added. We added $220.32 on May 12th. With those funds, we picked up 3 shares of Comcast Corporation, ticker CMCSA, out of the communications sector. We picked up those 3 shares at $34.98 per share. One more share added to our Occidental Petroleum position, picked up that ticker OXY out of the energy sector at $44.39 per share. And Cisco Corporation, ticker SYY, out of the consumer staples sector, picked up that 1 share we added at $70.99. Passive income added from the $220.32 and the new shares it picked up, $7.08 in additional passive income over the next calendar year. And we weren't done. We went back in on Thursday. This is the same day I bought UNH. We added the rest of the funds we wanted to add for the week, $368.89. And with those funds, we picked up 3 shares of Schwab Strategic Dividend Growth ETF. Picked up those, ticker SCHD, picked up those shares at $26.26 per share, and 1 share of Vanguard Total Stock Market ETF, ticker VTI. We picked up that 1 share at $290.05. These two are part of my weekly buys. Vanguard, the VTI total stock market, has really rebounded, not quite back up to its all-time high, but getting there pretty quickly. And I don't like to add whenever it's this high, but it's well over my cost basis anyway. But I'm going to continue to add 1 share every week, and I'm going to continue to add SCHD every week as well. SCHD has also rebounded a little bit. Passive income added from these new shares, $6.92. We did add $589.14 in new capital. And with the sale of American Water Works, picking up UNK and a little bit of Valet with those funds, as well as the dividends paid out and the new capital we added in the positions we picked up with those funds, we added a whopping $175.90 in passive income compared to last week. So very, very nice to see here. Usually, like I said, whenever I have a sale of a position, it goes the other way, but this was one of those rare times where we actually picked up quite a bit of income by making just one move in the portfolio. Now, here are the sector weights, and I do want to talk about this a little bit. Someone did message me and said that I had Google in the wrong sector, and he's right, or she, I'm not sure which one, but they are right. I do hold Google in my technology sector, and I do know it is actually a communication company. Now, I can make that change if it makes you guys feel better. I think the lady or the gentleman was trying to indicate that I maybe wasn't being as honest as I claimed to be, or so I'm not sure exactly what they were trying to get at, trying to call it a technology company, which I think most of their funds, comes from their Google search and other technology arms. They have their Google Cloud. They have some other companies that they've recently bought that are technology companies. So that's why I hold it in the tech sector in my portfolio. I do understand that it's communications. Let me know in the comment section down below. Do you think I should switch that up? It would take the technology down a little bit and bring communications up. I could definitely do that if you guys feel that it's, dishonest to hold Google in the tech side. I don't really look at it that way. Again, I know it is technically in the communications sector, but it is really, in my mind, a tech company, which is why I hold it over here. But I understand being completely honest in the overall transparency of the portfolio, it probably should be where the rest of the market has it in under communications. But let me know what your comments or your thoughts are on that. Now, communications currently, the way I have it set up, makes up 10.57%. I think if I moved it over, this would jump to 16 or 17%. This would go down to about 13 or 14%. So it would adjust the portfolio a little bit. I think it would make healthcare my largest position just by a little bit over communications. But again, let me know what you think. Consumer discretionary, still waiting on some things here. Lennar is one I've really been watching. To be honest with you, if BABA dropped back, a Chinese company, if it dropped back into the 80s, even the 90s, I would probably add that back in. I sold it in the high 90s there just before it went on its big run up into the hundreds, 130, 140. If I'd held it just another week, I'd really got a nice return on that one. But that's the nature of stocks. You see what you think is a better opportunity at the time. You got to make your move, just like UNH and American Water Works. I like American Water Works. I think it's a good company, 8% growth year over year. But UNH looks like a better opportunity right now. That's why I made that move. But consumer staples sits at 8.66% of the portfolio, energy at 10.16, financials makes up 2.39. If American Express was to take a big dip, that's one that I'm looking at there in this sector. Healthcare, obviously you saw I added the big tranche of UNH, which jumped this position up. I still hold Pfizer, still hold CVS. So heavy in the healthcare sector right now. It may be one where if some of these other positions rebound like CVS or Pfizer, I might actually look to trim a little bit, but we'll see. Industrials makes up 6.87% of the portfolio. Really haven't been adding much here. Would like Union Pacific to pull back a little bit. Owens Corning is pretty close to a buy. I'd like it back in the 130s. It's jumped up into the 140s, and I am up in the position, so I'm trying to not bring my cost basis up that much. But that's the nature of companies' prices running up. Sometimes they run above your cost basis, and you got to decide the range. That's why I like to put a range of what I'm willing to buy. And if it's above my cost basis, but it's still in the range I want to buy, I can continue to do so. Technology, again, I can make that change if it makes you all feel more comfortable. Google is technically in the communications sector, so that would drop this, like I said, to around 16, 17%, and we put it over here. Let me know what you think about that. It is currently at 20.02, so we're going to back off this for now, but if we move it, then that would open it back up for us to add, I guess. The materials sector here is sitting at 2.37% of the portfolio. Utilities has dropped with the sale of American Waterworks down to 4.11%. We just hold NextEra Energy in that slice right now. REITs and real estate at 6.01 and ETFs 10.87%. Eventually this will overtake the total portfolio as far as percentage allocated because of the nature of adding to VTI and SCHD every week regardless of the market. Over here to the right, you can see those same sector weights broken down here by percentage, and then you can also see the dollar amount allocated to each as well. All right, here it is. I show this every week. I think it's important for us to be transparent, and again, being fully transparent, you are absolutely right, but I show this every week, so you've seen it for years now. Well, I haven't held Google for years, but you've seen it ever since I bought it. That I put it in the technology sector, and full transparency, that's where I feel like it should be. I understand it is technically in the communications sector, and I can certainly make that change if it makes some of you a little more comfortable. To me, it's not that big of a deal because, again, I'm showing you that's where I hold it, but I can do that if that's something you guys and gals want to see. But I do feel like it is good to show you the overall portfolio so that you can see the ups and downs of holding different positions. You can see that sometimes they go up, sometimes they go down. Companies have a 52-week high and a 52-week low, and they can retest that 52-week low, set a new 52-week low, or retest that 52-week high, or reset a new 52-week high at any time throughout the year. Sometimes they do it multiple times throughout the year, and I try to use those fluctuations to my advantage. I like to be buying with it when they're below my cost basis or within 15% of a 52-week low, so long as it aligns with what I'm willing to pay. And I hold whenever they really run up, right? Kroger, for example, I'm not adding anything to Kroger. It's up 52.42%. I would like to buy more Kroger, but I want it under 55 per share, right? That would still be above my cost basis, but it wouldn't be near what it is now, and I would still be up because my cost basis is $45.17 per share. Obviously, I'd love it to drop down below my cost basis, but I don't know that's going to happen. So I've got a range I'm willing to pay, and it starts right around $55 or lower per share. Again, above my cost basis, that would even be above where it is a 15% of a 52-week low, but it would be just bringing my cost basis up to that 15% of a 52-week low, and that's how I use this one as well. I want this 15% of a 52-week low, this average cost per share to be below that. But again, I think it's important to show this portfolio so you can see a real portfolio built out over time. And be transparent about what I'm doing, what I'm buying, how my results are, whether I'm up or down. You're going to see that, what positions are in the red, what positions are in the green. Hopefully it gives some of you out there enough encouragement that you can do this too in confidence, and maybe hopefully seeing this over time and seeing some of my mistakes. You're going to make mistakes. It's going to happen. We all have them as investors. Warren Buffett has admitted he's made mistakes, and if he's one of the best investors in the world, you can be guaranteed that you are going to make probably more mistakes than he does. But that shouldn't be a deterrent to investing, right? It is part of a lot of people consider it part of the learning process, right? If you go to college, you're going to pay a fee to go to college. Well, consider it part of your fee to learn how to invest. And just know you're going to make mistakes. Try to keep the mistakes to a minimum. And hopefully, watching some of us on this YouTube and out there in the investing space, as long as you're watching people that are being transparent, you'll be able to see what they do, and then you can understand those mistakes they may make over time. I've made mistakes over time. It happens. But that's why I like to show it. I think it's important, again, and then that way it's not just me sitting here telling you what to do. It's me also showing you that I am doing it too. I'm in the market with you. I have a couple ETFs like VTI and SCHD. So I do see some value in ETFs or index funds that track a certain market that you're interested in. Warren Buffett would recommend the S&P 500. I just like VTI because it includes the small cap companies. It's the total United States stock market, including, like I said, small cap companies. And then SCHD is kind of in line with my investing strategy, which is dividend growth stocks, growing over time, but also paying a dividend that's growing over time. And that's what I'm looking for. Eventually, I want to use these funds to retire off of. All right, I think I've rambled enough there. Hopefully this makes sense why I show this portfolio. Hopefully there's some value in it for you. Let me know in the comment section. What do you think about people who do or don't show their portfolios? Do you get more value when someone on YouTube actually shows what they're investing in from week to week and shows you the results of their portfolio? Or do you get more value whenever we're just generalizing and talking about what we're doing? Let me know in the comment section. I don't have a paid Patreon account. I think we all have enough to pay for, so that's why I do it for free. I guess I could put it behind a paywall and charge you all $5, $10 to see it, but again, I don't do this to make the money. I've got a day job where I make my money, so if this can help someone out there, great. But this is the ticker, all the different positions in the portfolio, total shares, and all of these numbers will be as of the close of business on Friday. Total shares I hold in each different positions, current price as of the close of business on Friday, market value, average cost per share. This does include reinvested dividends. My purchase price also does include reinvested dividends. Total return, whether I'm up or down, you'll see it here, dollar amount, and then right next to it is the percent amount. Obviously, red means I'm down. The more green it is, the higher the position is up. Two highest positions right now as far as gains, Kroger at 52.42% and AT&T 60.88%. I remember a couple years ago now, is it a couple years, year and a half, 2 years ago now, when AT&T cut its dividend and everyone was running away from it. That's when I was buying it. Same thing with UNH. It dropped through the floor a couple different times and then finally hit a range that I was willing to buy. Like I said, probably about an hour late on this one because I could have got it in the high 250s, mid 260s if I had just been an hour or two earlier and really turned it around. Already up 8% on that position. Not sure that'll hold, but that's where it's at now. But again, percent return here, sector weights, each position falls in. On the previous slide, we saw the overall sector weights. This will give you a position right here, portfolio weighting compared to the sector weighting on the previous page, but then it gives you the sector that they are in. Whether they're a quarterly, monthly, semi-annual payer, you're going to see it here. I also have the ones that have already raised their dividend highlighted in yellow. As you can see, UNH, I don't believe it's raised its dividend yet this year. I need to look at that, actually. I did not look at that. So when we get off here, I'll update this next week if they've already raised it. I don't believe they have, though. And then current yield. My yield on cost portfolio weighting here. Again, what we saw on the previous slide was each sector's weighting. This is each individual position's weighting. And I do have a hard and not really a hard rule, but a general rule that I like to stick by. I don't want any one position, right? So Kroger, for example, I don't want it to be more than 10% of the portfolio. It's currently at 5.17. And I don't want any one sector to be over 20%. Now, the information technology sector right now, if I leave Google where it's at, is over 20%. And basically, that doesn't mean I'm just going to go out and sell a bunch of my companies in the technology sector. It just means I'm probably going to back off adding anything additional to those. And part of the reason it's up is because they've recovered, right? I'm up 5% in Google, LRCX, Lam Research. I'm up 15.78%. So that's part of the reason it's at about 20% right now. But I couldn't make that change and move this into communications where it technically belongs. Again, let me know what you think of that in the comment section down below. Estimated annual income for each position here, as well as the total at the bottom. We'll cover that here in a minute. Payout months here. These do fluctuate a little bit. If you have a company that pays out towards the end of the month, for example, and it pays out on, let's say, the 31st, and that was to fall on a Saturday or Sunday, that's going to fall into the next week, right? Dividend growth year over year, I try to adjust these as they adjust their dividends, and 15% of a 52-week low. I've touched on this in about every video. It just is a high water mark for where I want my average cost per share to be. I do not want my average cost per share, like Ally 2607, to be over where it sits at 15% of a 52-week low, $33.40. It also gives me, if I'm adding a position, if I wanted to add to Ally, for example, it's at $36.03 currently. I could add to it so long as my cost basis stayed under this 33.40, right? So that's what I'm using that for. All right, total shares 7,407.818. Market value $369,028.71. The overall portfolio has really rebounded. I am very happy with the progress in the portfolio and the moves that I made whenever the market really dropped here, about a month ago. I made some big sales and some companies that were paying very high dividend yields, but with slower growth, into some stuff that had lower dividend yields, but was hoping for some faster growth as far as overall growth in the dividend over time. And I think they were the right moves, not only for the dividend growth, but also for the overall returns and for that estimated annual income over the next 10, 20, 30 years. Purchase price, I do have $338,000 and $338,346.22 into the portfolio. Now, this does include reinvested dividends, so that's not just funds out of pocket. But if I was to turn off the drip, then obviously that would change things a little bit. But right now, I have the drip set, and that does include reinvested dividends. Total return, I am up currently, paper gains, that's all these are, $30,682.50, or 9.07%. And again, it's nice to see. Don't get me wrong. I like to see my portfolio in the green, but it's not what I focus on. Unless I go out on Monday and sell all the positions in the portfolio, I do not lock in this gain. Gains are locked in when you sell, right? So unless I sell, I don't get this. So that's why I don't really focus on it. It is nice to see that, and I know it's easy for me to say now that I'm back up 9%, I don't focus on this. But I said it whenever I was down as well, right? You've seen me down 4 or 5% in the red, maybe even more, 6, 7%, 8%. And I say the same thing. I'm not focused on the gains, because unless I sell, I don't lock in the gains. You don't lock in a loss unless you sell either, right? So AWK, I was up at 20, almost 30% at one time. It would have probably been better off if I'd have sold it then, but there wasn't anything else that I thought was a better opportunity at the time. The UNH presented a better opportunity, so I took the opportunity to sell one that I thought I could live without and replaced it with UNH. And that is one reason to sell, folks. If you see a better opportunity than something you are currently holding, go ahead and sell it and move on to the other positions. And I don't care if you're down or up in the positions. If there is a better opportunity, it is better to walk away from a loser and go to a better opportunity, if you really know it's a better opportunity, than to hold on to a loser, right? All right. Current yield 3.555%. My yield on cost 3.878. Actually, my yield on cost went up a little bit because UNH's yield on cost was at over 3%. AWK's was in the, I think, 2.7 or 2.8 range. So again, it was just a good move overall to make us that swap right there. And this is what I focus on. The dividends paid out by all the positions in the portfolio, and it continues to grow week over week, month over month, year over year as I add new capital, as I make changes in the portfolio, which you saw this week, as the positions in the portfolio raise their dividends, and as those dividends get reinvested and buy more shares, this continues to grow, and it currently sits, yes, that's right, above the $13,000 mark, $13,120.51. Very nice to see the overall growth in the portfolio as far as the estimated annual dividend income from last week to this week. A very big change, and finally, well over that $13,000 mark, and hopefully we don't drop back down below and on to $14,000 we go, which I definitely think we will hit by the end of the year. I'd really like to get to $14,000 to $15,000 in dividends before December, maybe even between the $15,000 and $16,000 mark. It'll really depend on some of these other ones that haven't raised their dividend yet, as well as how much I'm able to add. I have backed off a little bit what I'm adding right now. As you can see, I was around $1,300 to $1,400 per week. Right now, I'm trying to build up a cash position a little bit and keep some money in the bank. with the market recovery, I'm just not seeing as many opportunities. Occidental is one I still want to add to, though it's a pretty well built out position. Comcast was on my stocks to buy for May list. Lam Research was on my stocks to buy for May, but it has recently really run up back to the mid 80s, so I'm backing off that one. SYY, I really like it around $70 or lower. I don't mind it at 72.44, but I really want it 70 or lower, so it's just above that. If it comes back down, I want to add a little bit more there. Pfizer, I may nibble on a little bit. And SCHD, I'm going to buy that every week regardless. CVS, maybe nibble on a little bit. We'll see. If it was a drop, maybe 10% or something, maybe I would add some more here, but that's a pretty well built out position, right? I got 17,000 into it. So not a lot in the J&J. Dropped briefly below my cost basis. I think it hit 146 or 145. I was not quick enough to buy it. Now it's just back over slightly again. Another one that's pretty big a position in my portfolio, so I'm not looking to add. I'd like to add to some of these. You see the portfolio weighting here. Ally, if it was to drop down a little bit, it's only 2.39% of the portfolio. I really haven't been adding because they haven't been raising their dividend, so I've backed off that one. But I'm looking for stuff that's lower portfolio weighting to add to. Valet, I think, is another one I want to add to, 2.37. Occidental, like I mentioned, is only 2.79. Kroger back in the mid 50s. This is only at 1.92%. I'd love to add to these back in the 150s, but it's just not there. But this is nice to see. The estimated annual income really crushed it, really knocked it out of the park this week. Let me know how much your estimated annual income grew this week. And the dividend growth year over year bumped up a little bit as well, because UNH, which we just bought, is growing its dividend around 11.7%, and American Waterworks was around 8%. So helped out in the dividend growth area as well. We're at 6.14%. All right, got a little long-winded a couple times there, and sorry about jumping on a couple of soapbox, but I would like your opinion on the Google. Does it bother you that I have it in the technology space? Would you prefer I switched it over to the communications sector where it actually is in the overall market? That's where they say it should go. I really feel like it's a tech company, but I mean, feelings don't really matter, right? We should just stick to the facts. So I probably should move it over to communications, but I want to get your opinion. From the very first time I put it in the portfolio, I put it in the technology sector because, again, I feel like that's where it should go. But I'll switch it if you guys have an issue with where I have it. That's the nature. I try to put these videos out to entertain and help you guys. So if it's something that helps you out, I will make the adjustment in my portfolio. Let me know what you think down below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Drop a comment down below. Let me know what you think of the video. Let me know how your portfolio is doing. Big bounce back here recently. Hopefully your portfolio has bounced back as well. Are you still buying? What are you buying? Would love to hear from you. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So again, if you have a company like UNH or any others that you'd like me to cover in the Stock Pick of the Day series, drop it in the comments. I'll work it into the rotation on a day it pulls back. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great weekend, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion, investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor. Special thank you to everyone who's making it to the end of these videos. So thank you for watching. Make sure you're subscribed. Don't forget to hit that thumbs up. Share with anyone who think that might find value in the content, and drop a comment to let me know you appreciate the videos. Thank you.